Most people think that USDA loans are only for buying houses out in the country and only if they're brand new stick-built homes. But here's something hardly anyone knows. If you live in one of the 23 states, you can actually use a USDA loan to buy an existing manufactured home with zero down payment. This program has been flying under the radar, and it can be a total game changer for veterans, first-time home buyers, or anyone looking for affordable housing. So in this video, I'm going to break down what this USDA program is, why it matters, which states qualify, what the rules are for manufactured homes, how updates and repairs work, and most importantly, how you can take advantage of it. So let's dive in. Let's start with the big picture. Housing affordability is tough right now. Between higher home prices, higher interest rates, and competition for starter homes, a lot of buyers feel like they're priced out. Manufactured homes are one of the last truly affordable options left. You can often find a nice manufactured home on its own land for half the price of a stick-built home in the same area. But the problem has always been financing. Traditional lenders often make it harder to finance manufactured homes, and USDA loans, while fantastic for rural buyers, used to only apply to new manufactured homes. That meant if you wanted to buy an existing manufactured home, something already built and lived in, you usually needed cash or a different loan program. That left a lot of families stuck. Now here's where the USDA pilot program comes in. It opens the door for buyers in 23 states to use USDA financing for existing manufactured homes. That means zero down payment required, which is a huge win for affordability. There's no mortgage insurance, unlike FHA loans, which always comes with extra monthly cost, and competitive interest rates that can save you thousands over time. So the bottom line, if you've been looking at manufactured homes in a qualifying state, this program can make home ownership much more doable. Now, this program isn't available everywhere. Right now, it's limited to 23 states. So if you live in one of these states, you're in luck. Colorado, New York, Utah, Iowa, North Dakota, Vermont, Louisiana, Ohio, Virginia, Michigan, Oregon, Washington, Montana, Pennsylvania, West Virginia, Mississippi, South Dakota, Wisconsin, Nevada, Tennessee, Wyoming, New Hampshire, and Texas. That is a wide mix, everything from rural states like Montana and Dakotas to more populated states like New York, Pennsylvania, and Texas. Now, if you're watching this and you're not in one of those states, don't tune out yet. Programs like this often start small, then expand. So even if it's not in your state today, there's a chance it could be rolled out nationwide down the road. Plus, if you're in one of these 23 states, this might be your window of opportunity before demand picks up and competition heats up for these properties. All right, let's talk about the fine print, because this is where a lot of deals get tripped up. So if you want to buy a manufactured home using USDA financing, the property needs to meet some specific requirements. Here's what you need to know. Permanent foundation. So the home has to be on a permanent foundation. No exceptions whatsoever. That means the home can't be sitting on blocks or wheels. It has to be secured to the ground according to HUD standards. Has to be built after June 15th, 1976. Why that date? Because that's when HUD, the U.S. Department of Housing and Urban Development, created national safety standards for manufactured homes. So any home built before that is considered mobile and doesn't qualify. HUD code standards. The home has to meet HUD's construction and safety standards. Think things like electrical systems, plumbing, heating, and just overall durability. Past financing rules. The home must have originally been financed with an FHA, VA, or conventional loan, or it must already be owned by the borrower. Why? Because that ensures the home met lending standards at some point in its life. Location rules. The home has to be in an eligible USDA area. These are usually rural or small town communities. You can plug in any address on USDA's website to check eligibility. So the quick takeaway here is not every manufactured home will qualify, but if you find one that meets these requirements, USDA can give you 100% financing. And that's a massive advantage compared to other loan types. Here's another question people ask. What if the manufactured home needs some work? Can I still finance it with USDA? And the answer is yes, sometimes. So USDA actually allows certain repairs and alterations to be rolled into the loan. For example, fixing a foundation issue, updating plumbing or electrical to meet code, replacing a roof if it's needed. The key is that when all the work is done, the home still meets HUD and USDA guidelines. So if you find a manufactured home that's in decent shape but needs a little TLC, don't count it out. Financing repairs into your USDA loan might still make it a good option. Let me paint a picture for you. So imagine you're in Texas, one of the pilot states. You find a 3-bedroom manufactured home on an acre of land listed for $180,000. Normally, with an FHA loan, you would need at least 3.5% down. That's $6,300 upfront plus mortgage insurance every month. With conventional financing, you might need 5% down. That's $9,000 and stricter credit requirements. But with USDA, 0 down. Your closing costs can sometimes even be rolled into the loan as well. There's no monthly mortgage insurance and a lower interest rate in many cases. That could save you hundreds every month and thousands upfront. Now let's say the home needs a new roof. With USDA, you could potentially finance that repair into the loan as part of your purchase. So walk into a safe, move-in ready home without draining your savings. All right, so let's say this sounds like it might work for you. Here's how you'd get started. Check your state. So first, make sure you're in one of the 23 pilot states. Next, find a property. So look at manufactured homes that are on permanent foundations and built after 1976. Then check eligibility. So plug in the address into USDA's eligibility map online. Then talk to a USDA approved lender. Not every lender does USDA loans, and even fewer are comfortable with manufactured homes. So you want someone who knows the rules and can walk you through the process. Gather your documents. USDA loans are income-based, so you'll need pay stubs, W-2s, tax returns, etc. They'll also look at your credit and debt-to-income ratio. The process itself works a lot like other mortgage applications. You just get the benefit of 0 down and flexible guidelines. So here's the bottom line. Manufactured homes are one of the most affordable ways to buy a home right now. And with USDA's pilot program, buyers in 23 states can finance existing manufactured homes with 0 down. It's not perfect. There are rules around foundations, safety codes, and eligibility locations. But if you find the home that qualifies, this can be one of the most affordable paths to home ownerships available in 2025. And I'll just say this. Most people, even a lot of real estate agents, don't know this program exists. So if you're watching this, you're already ahead of the game. If you're thinking about buying a manufactured home and wondering if USDA could work for you, let's talk. I'll walk you through the requirements, check if your property qualifies, and help you structure the loan the right way. Click the link below, schedule a call, and let's see if USDA loans can get you into a home with no money down. And if you found this helpful, don't forget to hit that subscribe button. I post tips every week on VA, FHA, and USDA loans, all designed to make homeownership more accessible. I'll see you on the next one.